And this is exactly in line with what we had said earlier, that the situation, the liquidity situation is constantly monitored, and as and when required, the RBI will conduct fine-tuning operations, both to inject liquidity as well as to absorb liquidity. Now, this temporary moderation of surplus liquidity needs to be seen in the context of the large potential liquidity in the system arising from the expected pickup in government spending that usually happens in the second half of the year. Furthermore, drawdown of excess CRR and excess SLR holdings of banks can also augment system liquidity. In my statement of October 2021, I had stated that the Reserve Bank may complement the fortnightly main operation conducted through 14-day VRRR auctions with 28-day VRRR auctions, depending upon the evolving liquidity conditions. In view of the moderation in surplus liquidity, it has now been decided to merge the 28-day VRRR with the 14-day main auction under VRRR. Consequently, from now on, only 14-day VRRR auctions will be conducted. And as I just mentioned a little while ago, fine-tuning operations of various maturities for absorption as well as injection of liquidity will continue as may be necessary from time to time. During the current financial year up to September 28, the US dollar has appreciated by 14.5% against a basket of major currencies. This has caused turmoil in currency markets across the world. The movement of the Indian rupee has, however, been orderly compared to most other countries. The Indian rupee has depreciated by 7.4% against the US dollar during the same period. That is from 1st April of this year to the date which I just mentioned, that is up to 28th September. So while the US dollar has appreciated by 14.5%, the Indian rupee has depreciated in a very orderly manner by 7.4%. And consequently, it is evident that the Indian rupee has fared much better than several reserve currencies as well as many emerging market and Asian peers. A stable exchange rate is a beacon of financial and overall macroeconomic stability and market confidence. In recent days, there have been divergent views on the exchange rate of the rupee and the adequacy of our forex reserves. Let me set out the overall position once again. First, the rupee is a freely floating currency and its exchange rate is market determined. Second, the Reserve Bank does not have any fixed exchange rate in mind. The Reserve Bank intervenes in the market to curb excess volatility and anchor expectations. The overarching focus is on maintaining macroeconomic stability and market confidence. Our actions have helped in encouraging investor confidence as reflected in the return of capital flows since July. Over the medium term, the primacy of price stability embedded in our flexible inflation targeting framework provides the anchor for exchange rate stability.